Ladies and gentlemen of the crypto space, we're live on a Monday, June 24th at 11:32 a.m. People need to think differently about these markets. You'll never be able to navigate this shit. The S&P, Nasdaq, in the face of this kind of what's looking like a monumental shooting star, it's going to create all sorts of absolutely insane volatility. That's crazy. That is Nvidia. Who buys this stuff? That's no discount. That's not you bought it the wrong time. And then everyone piles in and it's a capital transfer process from the patient. Yeah, sure, if you got it at 11 bucks, that's cool. It's a 10x on the money. I mean, 10x on the money is kind of boring from a crypto space perspective. That doesn't really do much. Buy $1,000 worth of Nvidia in 2022. And everyone's, oh, Nvidia's changing everything. Everyone's saying Nvidia's changing everything, and you turned $1,000 to $10,000. That's not no crypto returns. That doesn't really change much. Seems like a malinvestment with regard to expectations. Meanwhile, structurally, this is going to be a very significant, have very significant effects on the rest of the market. As you can see, by Bitcoin doing what it's doing as well. Notice I don't have log on. This is remarkable chop at the top here. Bearish engulfing. I mean, that's like a spinning top candle following up last month. And then this month, well, we haven't closed yet at a bearish engulfing. So this is a very unknown state. Doesn't want to go up, doesn't want to go down. And clearly, macro headwinds or whatever, even macro tailwinds, it's basically unknown. That's exactly what a spinning top indicates from a technical perspective. Candles are significant, as I've said over the years. Doesn't matter if it goes down. I think folks need to ask themselves, what is the significance in price? And it's not one, I mean, frankly, one Bitcoin equals one Bitcoin is kind of consistent with what I talk about with regard to collateral. And I'm in collateral accumulation mode from a business operation standpoint. See, I guess a lot of what I've talked about most recently, not over the years, is a lot of the narratives that people talk about are bad the way they're used, but put into a decent, more robust framework, they actually become correct. All right, one Bitcoin equals one Bitcoin. I got collateral and it's just sitting there. And you don't make money off collateral. I guess if you borrow dollars and you're doing some sort of carry trade, but I don't have enough real collateral to do that, so I'm not doing that. If I had $1 million and I could borrow $250,000 and get 50% of my $250,000 with, like a health factor of 4, significant over collateralization, which is what I require to be comfortable. Sure, I do something like that. I don't got a mill. I got less than 100K right about now in collateral. So I kind of subscribe. Actually, I do subscribe to one Bitcoin equals one Bitcoin. All right. But not for the reasons that other folks do. I don't invest in Bitcoin. This is not an investment. So maybe hope that helps. Just give you guys a higher level and more robust perspective of what otherwise is a market that freaks people out. People are investing in this, and it's not a sustainable methodology. People invest in this shit. Look at this. I mean, people invest in this like they're gonna make a return. Like somehow Nvidia, which was the most highest market cap company on the planet, somehow they're gonna buy $1,000 at 120 bucks, and it's gonna go to 240. Oh dear Lord, where? Oh, someone intervene in person's, uh, you know, financial capacity. Like that's not even remotely reasonable. Not even remotely reasonable for this to double. This is extraordinarily irrational, especially for small actors to buy in. Like they're, oh yeah, I'm gonna DCA into an Nvidia position at $100. Where the fuck's it gonna go? It's already the most valuable company in the world, and it's probably a fair amount of steam has been taken out. But where's it going? Well, the expectations are so wrong. And frankly, that's the case for Bitcoin as well. The expectations are pretty much wrong for most people. 100x from here, 50x, or the Bitcoin standard in how many years? This year counts. Next week counts. Next month, 2025, it counts. And you can't sit around doing yourself a fiduciary disservice by waiting for the end of times for the Bitcoin standard to emerge. No, you got to manage capital like a grown up, like a professional. You got to manage capital like next week matters. It does. It really does. On all days, curve, nice strength, 34 cents. That's cool. Way off bottom. This certainly requires a log chart to not be disturbing. But look at the candle closes on the weekly. Very interesting. Constructive. So that was clearly blow off bottom. And it was all bought. And look, it was all bought such that the wicks are basically coinciding with 2020, November 2020 lows. Where's it going to go from here? What's the difference between this and this? Where's it going to go from this? This has down to go, whereas countless other very meaningful businesses only have up to go. It's no down. It can't go down. I mean, all right, that's not the best expression of the thought. Clearly, anything can go down, and the price tells us what the business is doing. And clearly, if there was a mass exodus of liquidity and went from 2 bill to 1 bill to 500 bill to quarter 250 mil and lower, and it was failing. That's a failing business. You must accept and recognize a failing business. But if you look at business activity, that's not the case. See, the price action, this is by definition mispriced, because if you go over here and you go over here and it loads at some point in the near future, hopefully, there's 1.9 billion dollars. And then on Curve USD, it's $123 million. Then Llamaland, $62 million. You go down the block to your local shopping center and you look at a small business, a pizza shop that literally the entire pizza shop costs $500,000. And it makes, maybe a couple $1,000s a week in profit for the business owner. And this business has over $2 billion worth of participation. This is a small business. It's a pretty damn big small business. So token price is mispriced in that regard. Um, I mean, it's the same across the board. The whole space is mispriced. But this is why it's so imperative to understand macro financials and why these mispriced assets are truly significant from a business perspective, especially heading into the conditions that are pretty much expected in 2020. Well, Q4 2024. I mean, DXY is showing strength, needs to get devalued. Yen, what the hell are they going to do? They're going to have to get bailed out. The U.S. isn't going to lower interest rates to the point where their currency is safe. So some sort of strategic financial intervention will be required, something more sustainable than Japan selling hundreds of billions of dollars worth of US government debt into a market where the US government has to refinance probably a remaining $10 trillion before the end of this year. This year, not 20 years in a Bitcoin standard, not 15 years in the end of the dollar, as global reserve. What does that even mean? This year. This year counts. It matters. This is this is insane pressure on the global financial system. And this is probably in good part why liquidity is being drained from Nvidia, which is literally the one or two stocks that have been holding up the entire United States stock market from an index perspective, and clearly Bitcoin as well. But I don't really think Bitcoin contributes significantly at all to global economic, capital requirements. So it's like how much of this is getting sold because it's really needed elsewhere. It's just such a small amount of capital. Total market cap of Bitcoin is basically zero in terms of global financials. So it's marginally contributive to global financial liquidity needs. So this is primarily driven by sentiment as we push below, we're pushed damn close to 61K. As we push below 61K, people, calm down, ladies and gentlemen. Um, you know, most of what I wanted to talk about today is this. Things don't look great, but what does great mean? Great means you adhering to your business rules and just performing. If you have a structure such that, such as what I've created, I have no solvency issues. I have X amount of revenue on a weekly basis that goes up and down. I have no liquidation risk. I have no leverage on at the moment from an AVE perspective. And even if I had leverage on, the most I'm taking is 5 as a health factor and mostly 10 as a health factor. I can borrow thousands of dollars here. And that is no liquidation risk at a health factor of 10. Bitcoin would have to be like $8,000 for that kind of loss. And it makes it irrelevant to consider. So my business is just operating. And it's not that I'm not thinking about overall conditions, it's that the overall conditions are irrelevant. I possess collateral, check, business objective. I possess investments, check, business objective. I invest when there's opportunity, check. I've been doing that the last years, 2 years since 2022. Uh, Great. That's part of the business rules. Is there any opportunities available? Uh, is there, and I'm required to invest if there's opportunities available. And contrarily, I'm actually specifically, explicitly required to not invest unless there is a significant discount available. And just because there's a discount available doesn't mean it's an opportunity to accumulate because overinvestment is equivalent to malinvestment. Fiduciary obligations are a matter of strict prudent judgment, good decisions. Only invest if it's a good decision. I think Arrow and Discord asked me to talk about Tapioca. Might as well show the chart. This thing looks insane at $2.78. So we'll keep this up. Let's go through the commentary and see if you guys have any questions about what's going on in the markets. Have any questions about your sentiment? How are you feeling? How's your Monday? How are things going? Nice outside today. A little humid. Hungry. I've been fasting, so anyway, that's what's on my mind. What's on yours? Tapsy, good morning, all. Gazika, greetings. Rob, the end is nigh. Yeah, yeah. Splits, Jay, good morning. Kill us, hey. Uphold delisting die and USDT. News was very surprising. There's plenty of countries. Europe is small. That's fine. Europe is very marginal in the global financial system, um, especially from a population standpoint. It's microscopic. So the over the next 20 years, I I'm inclined to think we don't know what's going to play out over the next 20. I mean, Tether's very meaningful from a United States perspective and how literally England has contributed to global financials for the last, what, 75 years? I mean, that's literally what Tether is. It's by definition a Eurodollar bank. So they could set up whatever rules they want. There's a lot of countries out there that need dollar liabilities because that is the global currency. The global currency is not the dollar. The global currency is liabilities thereof. Pretty cool to see Tether's chief directly retweeting new curve pool. I mean, literally, you could. This is all banking rails. This is all banking infrastructure, and that's what's so interesting, and that's why Tether's retweet. How does Tether manage its FX? How does it manage its peg? That's the whole point. That's the infrastructure, and there's a fair amount of it that's and it's not extensive, meaning it's not like 50 protocols. It's not like 20 protocols. There's only a couple of protocols in this entire crypto space that have a capacity to be base layer infrastructure to support literally what you just mentioned, Tapsy. I mean, what balancer? That's about it. You got balancer, you got curve federation, balancer, micro federation, or whatever it's gonna uh, turn out to be, and they're going to protect and defend the existentiality of their stablecoin, and to do that, they need a capacity to manage liquidity depth and peg. It's as simple as that. Now, we've been asked to talk about Tapioca, which is looks really strong at 288. Jesus Christ! Very much looking forward to the new uh, the new update that's coming to get production back fully functional. This is a dollar. They are going to be a dollar liability printer. This is also a Eurodollar bank, amongst other things, including a money market, credit facility, which is, you know, Eurodollar bank kind of encompasses all of that. And you can't even say it's competition. This market is so unsaturated from a capitalization standpoint that how is USDO competitive with CRV-USD, competitive with MIM, competitive with Go, competitive with DAI? All of these dollar liability systems are basically zero in terms of global financials. So the potential capitalization of these businesses is we can't even fathom where it's heading because they're basically on zero right now, relatively speaking. Um, this is all testnet, including the likes of Frax and Curve and Aave. It's all testnet, all of it. This is all like a drop of a little bit of cash. There's a couple billion here, a couple billion there. It's whatever anyone could potentially think about where things are heading, wherever it is we're heading, we haven't even started yet. And that's a pretty consistent theme they've been expressing for some time. But everything that was sold from top has been bought. It's very large actors buying very large slugs. There's no emissions. The protocol isn't even live. Everything that was sold was bought. And it was bought by persons that have a very tight alignment with the technology that's going to go live. And the technology involves disrupting circulating supply by locking, and you can borrow against. Oh my God, the tokenomics, tokenomics, the structure of the business. This is an iterative evolution of everything that was originally created by Curve. This is an evolution of voter escrow technology. And when you're making something better, you don't necessarily deprecate the original tech. So that's not necessarily the point I'm trying to make. The point I'm trying to make is there's a lot of talk on from innovators. Like, yeah, this tech is so much better. It makes everything else obsolete, and that is true. And that is the case here. This tech is an iteration far superior to the voter VE33 model, which is an iteration on top of voter escrow. It has a different degree of lendiness, different degree of trust. It's not even out yet. That's the whole point. So there's a bunch more that goes into, you know, adoption, consumption than merely tech. History is littered with inferior tech, not only remaining relevant, but also thriving in a market filled with better tech because of entrenchment, moat, vested interest. And that's okay. And that's a competitive environment. And that is what makes better products. So, as much as I unequivocally state that the business model of Tapioca on paper is far superior than anything that comes before it, that doesn't mean anything to invalidate the significance of anything that comes before it. And that is the appropriate perspective from a rational investor or a rational investment standpoint. The fact that it's at 287 with Bitcoin doing what it's doing shows you that one is completely off the radar of degeneracy. This is not traded. We're not traded by, whiff that's getting absolutely annihilated or any of the meme coins. It's not in that type of category, but it shows you this price action that the persons that bought it that didn't understand it or didn't buy enough size or don't understand the concept of cash flow or don't understand the concept of business structure or don't understand the concept of fiduciary responsibility and malinvestment and a structured portfolio, they sell it and then it's literally just bought because they're selling a couple $1,000s worth, five, 10, $15,000, and then someone comes in and buys $100,000 clip, a $200,000 clip, a $47,000 clip. All the small shit is 55. It's all bought. It's all getting bought because the potential cash flow is quite fascinating from a competitive analysis. Now, what is that competitive analysis? Where did they? Yeah, the tapping. Did they pull it down? No. Come on. Yeah. All right. So the boys did. Oh my God, the boys added Go already. All right. All right, Ben. You and the boys are working way too late on this data. So this data is this page, tapping.xyz, and gives a sense of competitive analysis of the comps. It's a very historic real estate terminology. That gives you your market cap shit, and that's not too much to look into. But what's most interesting is the mechanics, and that's what's exciting from an investment standpoint. And the mechanics are, as I've always said, Revenue, yield, the revenue you get, the money you get every week is inversely proportional to token price, or rather the APR, and the APR is proportional to business volume. So, 50% APR goes to five, and then, but you're making 5% on 20x the fair market value of your position. So you're making the same amount of revenue because your APR is on your basis, the price that you bought at. So you're still making 50% on your basis. Your APR is literally proportional to the business activity, which on an unchanging inspection will be the same. So the potential is fascinating. Die 100x from here. Oh, that's tantalizing. And what does that mean? So, for folks to really understand capital management, you have to understand my perspective or appreciate my perspective. 100x. I'm required by business rules to lock positions in perpetuity. I have no capacity to sell. I am not only prohibited from selling from my business rules, which are just on paper, so I could violate my business rules, and there's implications for that in my business documentation, but I'm also restricted because of technology. These deterministic locks in the software allow me to execute my business rules without question in a verifiable way. So it's quite extraordinary what this technology allows me to create in terms of business rules. So this goes 100x on the money, the fair market value of the position I have, and I can't sell it. And that's significant because that's going to be the case for a lot of people. When this protocol launched, for the 5 minutes that it launched, people were locking for 12 years. So while other folks may not have as robust a business rules that I do, they were still locking for 12 years. I would lock for 12. I would lock for 100 years. I would lock permanently. I don't need a year on my lock position. Well, the point is, other folks were locking for a very long time. That's very interesting. I mean, a lot of this protocol's entire conversation during inception and development up until release, it's just cash flow. It's talking in terms of what I do as a business. It's like when you're buying this, you're not buying it for multiples, you're not buying it for trading purposes. You're buying it for 50% APR, which is unheard of in traditional finance. But even Aura is cranking out the APRs it's cranking out. And Y Curve was at 97% because of the depreciation. As price goes down, you're able to buy more of it, so your APR goes up 97%. There's inherent flaws in these businesses because of the cash flow that the business generates. That is the measure of um, resiliency of existentiality. That the business is operating. And this is stuff Warren Buffett would talk about. A mispriced asset is a business that's got a shitload of cash flow, decent books, and the market is just mispricing it because the market is stupid. The market is looking at the price, not the cash flow. That's all he talked about was cash flow. Cash flow positive business that has a market price that's just wrong because I'm going to buy that at that discounted price because it's producing a shitload of cash flow. That's all that matters. Cash flow is everything. That's the only way to mentally navigate financial management in any sustainable way. Hope that helps. I thought a concept cap ad work again this morning on the AM of a Monday. Adam, hey, hey. Let's do it. Brian, happy Monday. Crypto Tube, TW Tap rework. What are your thoughts? I hope I answered most of that. They'll get it out really soon. I don't Oh, do I have the snapshot? Yeah, I do. When is it done? I think it's done tomorrow. Let these guys finish it up, and we'll have it really soon. Looking forward to it. 60,800. We go to 59, 58. Look, you want some Bitcoin perspective? Let's go out to the 3 month. Oop, I got log on. Yeah, that's fine. All right, so let's check back at Bitcoin at 40s, 44, and watch it hit 38 in some sort of crazy crash. Dip was down at 16. It's over 100%. So 38 sounds about right, or sounds reasonable. Why not? The whole world is falling apart. The whole macroeconomic landscape is falling apart. The entire country of Japan, from a currency perspective, looks like it's imploding. And you all wouldn't be surprised to see Bitcoin dip to 40? 40 is structurally reasonable. Structure is quite intact. And Nvidia dipped to 34 is like, all right, dip to 34. I've been telling you guys an aberration to the upside of the long-term moving average, and you mean regress to the moving average, and there's nothing wrong with that. That should be the expectation always. Nvidia goes to 35. Structurally looks fine. You wouldn't even notice it. I mean, clearly, if you bought it at a buck 20, you'll notice it. But at 35, the chart looks like it's higher lows and higher highs. It looks structurally healthy. This aberration is purely a manifestation of irrational exuberance. And clearly, we see that in Bitcoin as well. So maybe NVIDIA has overtones of Bitcoin. Look at this deviation, these aberrations to the upside against the 3 month time weighted average price. And then you got to dip below, and then it goes above, and it comes below. Look, October of 24, everything crashes to 35. How does that look structurally? It looks fine. It's a higher low. And then you blow past and you're at 145, and then you dip back down to 50, 40, 50, 60. You could even no, not 40s. Let's say you dip back down to 60. And structurally, all that shit looks reasonable. You could draw a bunch of charts and be like, all right, that would make sense. Hope that helps. Teddy, what effect do you think BTC ETH have on locked ETH equity locked in ETFs off chain will do to the chain lending with said collateral? Um, On chain lending? I mean, I don't. There's no off chain lending infrastructure. Will ETFs eventually collapse on chain lapse of opportunity cost? No. You got to remember, there's so much capital out there, and old people, boomers, and folks that are just they have countless millions of dollars in the stock market because they literally rode just 10-year bonds to Valhalla, and then they lost 40%. I mean, literally, it was 43 years of a bull market in bond. He literally just bought bonds, and they went up in price year after year, and then they blow off top in October of 19, and now it's been crashing ever since. What a disaster for bondholders. But that's the same thing they do with equities. It's just they don't know how to manage the capital. They've always had fund managers and portfolio managers that do the stupidest shit with people's portfolios. They do the same shit that everyone else does. And if you do the same stuff that everyone else does, you're going nowhere. So, Teddy, that ETF and those ETFs and the ETH locked in them and the Bitcoin locked in them, that's it. They'll just sit there. Boring AF. And the folks that have a capacity and knowledge to participate on chain and access credit, permissionless credit will do as such. So I don't see the ETFs draining in that regard. Maybe 20, 30 years down the road, you got to get rid of the most previous generation. Once every once in 20 years from now, once 80-year-olds predominantly are no longer with us, that's how the structure of the system changes demographically. Adam, any concerns about the dip in gas fees? I don't know how to rationalize why we had much higher GWE early in the year. Yeah, it's just business activity. The activity is evaporating. You see that in the volume data. Um, you go over to volumes, go over to chains. Volumes rolling over. Arbitrum with a big bump. Wow. Arbitrum, Blast, Linnea, that's where the activity is. It's very isolated activity. Ethereum bleeding out, Solana, BSC, base is absolutely collapsing. So this is why I talk in terms of exposure. And I would have liked to acquire exposure to base financial activity, and the best expression of base financial activity is aerodrome. And I have significantly restrained from exposure to Aero, and rightfully so. Next level, probably 38 cents. All right, 38 cents. I don't think, like this is where you want an NFT. If you could get an NFT anywhere between 5 and 10 cents, okay, now you got a discount. Um, but 38 cents, that's just the leg. They go 38 cents, check back on base and see what the volume is. If the volume's still minus 20, minus 30% another week over week, you're going to get a better discount. So what am I doing? I'm accumulating collateral. I'm accumulating some cash. Thank you, Layer Zero. And if there's a decent investment, I am one required to invest, and two, right now I'm not. I am required to not invest, waiting for a significant discount. I can only invest in the best possible circumstances, which is when something is significantly mispriced. So what do we know? Uh, what do I know? I know that I need to have exposure to things, and I want to have exposure to base because I think that's a good financial decision. But it's still overpriced. Still overpriced. That's not that's not something that I need someone else's opinion to state, or I'd be receptive to someone saying I'm absolutely insane. It's irrelevant. What I'm saying is what I do. And this is overpriced, and I will wait for a significant discount. And if there's a significant discount, I'll be able to acquire a position size that I warrant to take a position. It needs to be a big ass position. Simple as that. Hope that helps. Let's go back to the data. Linnea is doing good. I would hope so. I took those three V33 positions. It was Linnea, which was Nile, and Mantle, which was Clio, and obviously Arbitrum. And oh, that's nice exposure. Arbitrum plus 28% volume. Linnea plus 22% volume. Where the hell's Mantle? Mantle is obviously killing me. Mantle's. Oh. All right, look, but from a capital management standpoint, I made two good investments and one bad investment. There's no discredit to Mantle and the tech, no discredit to Cleopatra either. But from an investment standpoint, you don't win them all. You can't win them all. You can't just have everything go up. So it was good exposure. Mode, guess what? Where's your exposure to mode? Oh, hello. So, as much as Velodrome is depreciating as well, down to 9 cents. Optimism, you can look at. Where's optimism? I saw it here. -5%, marginally down. So optimism is a big narrative, clearly doing much better than base currently. And additionally, Velodrome offers that diversified exposure, one asset exposure to many markets. Thinking in terms of exposure, you know, Rational Trust has acquired very, very well chosen exposure. Probably could have restrained myself on Mantle, and that's about it. And I probably would want Mantle. I just could have gotten at a better price. And I've effectively restrained myself well from um, base. I want exposure to Coinbase's base, but I could get a better price. And it looks like that better price is going to be offered to me. Um, Tapsy, combination of Denkin, yeah, it's a big deal. More activity in L2s, yeah, but here's the data. Here's the volume data. It's also just the market. It's also Nvidia with a massive uh, shooting star candle, and it's also Bitcoin approaching its threshold price at 60,000. That looks like it wants to head down. There's plenty of support, about 38. Going to the monthly, there's plenty of support, and mid to lower 40s. That look very structurally reasonable for those kinds of prices. Sergio, present. Hello. Tapsy, I do believe 97% on Y curve was because of their extra payout due to migration for a week. However, 40 to 50% is still crazy. 40 to 50% is insane. It doesn't exist in traditional finance, and that's meaningful. That's meaningful stuff. This is the only investable market on the planet. Anything else is just not going to get you what you're looking for. Tap Sexy Zone Shinzobo. I was careful with that one. Oh, clearly the Sexy Zone is a buck. Is anywhere between a buck 15 and a buck 50. Um, Unless you pull a Mantle and but that doesn't make any sense. It's just not comparable in that regard. And as always, price action tells the story. So there's plenty of reasons for price action to do whatever it does, and we have to respect price action. So this is a very constructive chart. It's literally 5 minutes old, so less than 2 weeks old. So um, early in that regard, but sexy zone is down here. Literally, all the sexy zone is a level of distress, a level of potentially seeing a mispriced asset, and you breach levels of support. It's likely due to large liquidations, large players that are out, and price action doesn't invalidate the potentiality for the business. So the business could come online and be extraordinary, in which case this is an opportune price. So the appropriate thought or thoughts to contemplate are, is it invalidated or not? And if it's not, and the price is depreciating, what you need is a cheap enough price to acquire an appropriate position size. And that's how you determine what kind of discount you need to acquire a position. And you want to acquire a position, something that isn't invalidated. So that is the critical thing to determine. The business is good and it's down in price. That means people are selling for the wrong reason. Why do people sell? Most people sell. Most. There's only 374 people listening, and that's relatively small. Frankly, it's basically microscopic compared to the whole space. Most people sell because number don't go up. Left curve mentality with the memelets and picture some sort of brain melting, graphic. Number not going up, I'm going to sell, and that is not what this asset represents. This asset represents a very right curve perspective of, you buy 50 grand worth of something, you get 25 grand a year in salary, and then 10x on the money. Half a mil is cranking out 20%, you get a $200,000 a year salary. And then a 10x from there, 5 mils cranking out 15%, and you're making uh, 750 grand a year. And that's how the mathematics works out with regard to price appreciation of the token and business activity. As your principal appreciates, business activity appreciates, the numbers get weird in the crypto space because there's no pasty board of white pasty board of executives saying, "Oh, I'm going to give these peasants a couple extra pennies in dividends." No, number go up in volume and business activity. That's literally the whole point of the protocol. That's what we get paid on, and that's exactly what the team is expecting as well, because they are a very right curve team. Hey, Cap, thoughts on Prisma? No interest. Hard liquidation model. I'm not interested in that tech. Like liquid EV, it is a liquid EV1 derivative. If anything, uh, with Tapioca coming online and CRV USD with the soft liquidation model, hard liquidation models are just not interesting. I'm inclined to think that's what like AVV4 is thinking. That's what Fluid does to a degree, I believe. It's the DApp's Fluid protocol. So soft liquidation models changes everything. Um, Albeit there's big tech and big teams and big connections for the Prisma team. So look, I still have a good opinion of Abracadabra, and I think when the market is hot, Abracadabra is going to do quite well, most likely, and that'll probably be the case for Prisma as well. Because I'm inclined to think those with vested interest in Prisma are not just sitting around thinking about is it going to go up? They're actively contemplating what the hell they could possibly do. It's just not something I'm interested in. I can't own everything, and frankly, I don't want to own it. I'm not interested in that kind of technology. You need to construct a portfolio that's an expression of what you're most interested in or what you think is the best technology, which ultimately means what you think are the best businesses that you want to own. I'm going to wrap it up in a couple minutes. John, what are your thoughts on Tarot as a proxy for solidly forks? Massive revenue gleamed and revenue sharing starting with Sonic. Um, Sonic has the potential to do very interesting things and create a lot of volatility and a lot of financial activity. Never doubt Andre. Doubt his first releases, but don't doubt him. I mean, V33 I see as significant tech, and there will be survivors, and there will be at least some of the V33 implementations that will do well. Which ones? I don't know. We'll see. That's not the point of the statement. The point is, um, I think Phantom um, is home base for like a solidly or equal on Phantom. I don't know. Phantom is going dormant right now. As the market goes dormant, we see base with minus 42% week over week volume. I don't even want to look at Phantom. It's just there's nothing there. It's all way too early to make any determinations or conclusions about where things are heading because things are slowing down. Things haven't started. That's where we are in the cycle, by the way, everyone. Things have not started yet. So thoughts on Tarot? Beefy? Tarot beefy? That's kind of the sentiment I get. It does things for you automatically. That's cool. I mean, I might be wrong, but that's just what I recall. I haven't looked at it. It's just off my radar. I don't do that auto compounding, those. But look at Beefy. That's big stuff. They have never had any issues. And those boys have been shipping for years. Beefy, Tarot, talk about survivors. Survivors are very interesting. That's the most important thing, the survival. And that's why I speak to everyone about spot and business and you owning businesses. And I have I have zero chance of existential risk. People come to the market and they're leveraging 20, 30, 40, 50, 100, a quarter mil, a mil. They're doing whatever the hell they're doing and they're leveraging. And I have literally 0% chance of existential risk of my capital. And that is the only thing that could allow me to sleep at night. I am guaranteed to survive. And I would have it no other way. So those boys have survived, Beefy, Tarrant, and a lot. So survival is the most important characteristic for yourself and for the businesses that you invest in. Anyway, do you see a federation forming around TW Tap? So you cannot foresee these things. A lot of things are a manifestation, organic manifestations. It's not about seeing if something's going to form. It's a matter if it does or does not. So that is a critical observation if a federation has formed or not. And of the entire crypto space, the only federation in existence is the curve federation. There is no other series of protocols that are even remotely existentially dependent in comparison. Hope that helps. With how early and innovative tap is, does the current guarded state give you comfort that they'll almost definitely get it to work as intended? Uh, there's a couple of words that I've been using a lot in language and business documents, and there's no such thing as guarantees. There's no such thing as definitely. There's no such. There's everything in the universe is probabilistic. It's odds. So based on the team, the developers, the documentation, the proposed business, there is a reasonable chance that they certainly have the development capacity to build something that is significant. And they have a vested interest in doing so because of of the way they raise capital, um, the team would benefit most not from selling but from the business revenue. Like this is this chart is an expression of that reality. Um, there is such an incredible amount of alignment with Tapioca around the concept of business revenue. You're buying cash flow, and I always that's more recently that has been expressing so strongly, and I find that quite fascinating because that's literally my entire perspective on crypto markets, business cash flow, and that's what I want as a business owner, business cash flow. So the alignment around that concept for this protocol is downright fascinating. Mostly anyone buying this, and the chart says this because it's not down, mostly anyone buying this is buying this not to sell it later. They're buying it so they could get revenue, income, cash flow. That's pretty darn interesting. Hope that helps. I've been loving my Arrow deposited on Tarot, earning 80% with no locks. That makes it a cash position. If it can be sold at some point, it must be sold. Statement I often make. If it's not bolted down, anything not bolted down needs to be sold at some point. So, okay. Um, yes, it's been depreciating bear in mind it's an LP position. So an LP position um, has impermanent gain, which is not something most people talk about. That's one of my original topics I talked about years ago. So as it goes down in price, your LP is selling into dollars. So that's price protective of the overall position's value. Plus, it's earning 80% because of aero emissions and aero revenues and the LP revenue and the opportunistic selling to stables, which is price protective. Sure, LPs are for some folks. I know plenty of folks that throw around a lot of capital in LPs. It's not something for me, but I could understand how these numbers are quite interesting. Listen, 100 grand at 80%, that's a lot of revenue. So if the 100, anyway, you can run the numbers all you want, but 80% is an absolutely monumental. Um, well, there's no such thing as single-sided. The revenue comes from somewhere, and most often when you see single-sided, it means that it's automatically managing capital for you, which is fine. What is that? What was it, Popsicle Finance? That was what Danny came up with um, shortly after Abracadabra. And I think what was it, Popsicle turned into Wagme, whatever he was doing most recently. But the concept, that's managed capital, and then that's like an actively managed ETF of sorts. So in the end, all of this is that's a big concept. Um, I encourage structure rules and business rules and define behaviors under different conditions. And if it helps, I define that type of position as cash. And that is not necessarily something to easily digest. It's a long story that we've been telling for quite some time. Hope that helps, ladies and gentlemen. Monday, June 24th at 12:28 p.m. I thank you all for joining me today. 396 people made it to the end of the stream. Oh, yeah. Tell everyone to subscribe. Jump on our private Discord. We got a great community of folks that have survived the bear market and know all there is to know about crypto cash flow. Oh my god, that rhymes. Ooh, ooh, that was a good one. I wish you all a good one, and I will see you guys and gals later this week.